Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about losing days. I know everybody's favorite topic, right? They do happen, unfortunately. The ongoing joke is always, well, you can make withdrawals from the ATM. The market's kind of an ATM. You can make withdrawals, but every once in a while, you got to make that deposit. And today, for me at least, was one of those days. Now, when it comes to losing days as a whole, really the important thing is, well, there's actually a lot of important things. The first thing is looking back at your trades and seeing and really analyzing, did you do something wrong? Did you take them in the wrong place? Did you maybe jump in a little bit early? Did you accidentally fat finger a hotkey on your keyboard, right? These are the types of things that you really need to narrow down and figure out, hey, these are problems that need to be fixed. Or was it simply just market condition? Today was a bank holiday, and a lot of banks were closed. Actually, well, it's a bank holiday, all of them are closed. But along with that, settlement dates on Thinkorswim are pushed back a couple days. It's generally seen as a holiday, right? So because that's the case, one of the big things that we really have to contend with is the fact that, well, we're dealing with somewhat holiday volume. The New York Stock Exchange and the futures and Forex and all that are open, but there's going to be a lot less market participants, and we can see that in the volume as it is. I mean, at this point in time, and it's 11:18, the S&P has traded 760,000 contracts. The Dow is at 111,000, the Nasdaq's at 328,000. So we're dealing with a slightly lower than normal volume, although in the grand scheme of things, it's actually pretty good volume. But we're dealing with a lower volume scenario, and that usually means that the markets will be more vindictive. When there's lower volume, those larger orders that come through push the market around a little bit more than they normally would. Now, this is where you got to look back and you got to say, hey, did I make a mistake? Or was it simply just the market condition? Now, I want to remind you, the one thing that I always refer back to, it's never the market's fault, right? It's never the market's fault. It's always the trader's fault. Our job is to assess risks, utilize risk association and exposure, trade that risk, and if we are wrong, we're wrong, right? Welcome to the markets, but it's never the market's fault. Right? That is a very amateurish type of thing to say, oh, well, it's the market's fault, right? No, you read it wrong. Now, that's the case for this, right? Today was a losing day, and I simply read it wrong. Now, would I look back and change anything about my entries or exits on today? No, not really. I don't think I would do anything different on a day like today. And that goes to kind of go back to, well, it's a holiday, Now, again, it's never the market's fault, but what could have I done to mitigate a potential losing day? Well, simply put, just not trade on a bank holiday. Pretty straightforward, common sense type of mentality, but there will be days like this, right? There are going to be losing days, and there's nothing wrong with them. The important part is that we learn from them, right? Go back, review your trades, look at the trades you took, look at the locations that you took those trades in, and honestly ask yourself, is this a trade that on any other day, would you still take that trade, right? If the answer is yes, then you didn't do anything wrong. You followed your plan. It just didn't work out, right? Remember, with every trade that you take, there's a probability. Let's just say, as an example, you're taking a trade that has a 60% or so chance of success. Well, that means that 40% of the time you're going to lose, right? So if that's the scenario that you're running into, you probably just caught a bunch of the, good setups, but they hit that low probability scenario and took you out. Welcome to the markets. Every day isn't just a day that you can come in and withdraw from. You got to make those deposits. The other important thing is that you cap your risk, right? One of the biggest things that I see very commonly is a new trader or even an experienced trader, we all fall victim to this, where we come in, we have a hard start to the day, right? We take a first loss of the day on the first trade, right? Right out of the gates, it's already starting off like, oh, crap, right? Why did I even wake up today, That does happen, and one of the important things that you have to keep in mind is, are you at your risk loss? If not, then you need to keep trading. And if you're not in the right mental attitude to continue trading, then you need to stop, right? That risk management, like we always talk about. Now, one of the other things is simply just starting off the day, you have a little bit of a loser, then you have some winners, and you have some more losers, and you hit your maximum drawdown amount. Now, everybody should have a maximum drawdown amount, right? I don't care if you're trading a $10 billion account or a $10,000 account or a $100 account on Robinhood, whatever. You need to have a maximum loss amount. Everybody will have different numbers. Generally speaking, I don't want to lose more than 5% of the account in a day, and that is extreme. I don't want to lose more than 3%, preferably even down to 1.5%. Depends on your account size though, right? If you're trading a small account, you don't have a choice but to front that little bit of extra risk. But you should always, always have a risk level. And if you hit that, you stop, right? Period. Done. No more. One of the biggest problems that I end up seeing is that people will hit that loss limit and they'll think, man, you know what? They sit out, right? They do what they're supposed to. They sit back and they say, okay, you know what? I'm done for the day. I'm not going to trade anymore. They watch a trade that they would have taken, and it turns out to be, it would have been a winner. Now they're irritated, right? Now they're irritated because they skipped the one trade because they were following the rules, and maybe, you know, okay, this next one that sets up, I'm going to take that one because that's going to be a winner, and I'm going to make this loss back, and guess what happens? It's another loss. And you ended up doubling your loss that you could have originally just stopped on, right? So it almost never gets better when you're in a losing situation. And if you are in a losing situation, you get back to break even, it almost never gets better than that, right? It's really hard to turn a losing day into a winning day. And if you do, it's time to put that period on the sentence and call it a day, because you're probably not going to get much better than that. So risking the X amount, I mean, that's what we do. We risk on every trade that we take. But you have to have a certain allotment that you are no longer willing to trade anymore, right? When you hit this amount of dollar value or percent value or whatever, you're done, right? And there can't be any exceptions to that. And if you find that you're the type of person who just can't really stick to that hard stop rule, close the charts, shut down the computer, go for a walk, go do something else, get away from the screens. If you can't see the market moving, you're not going to feel tempted to trade. Easier said than done, I promise. It's not easy to shut down the computer and walk away, but the important part is that you keep your risks manageable, okay? Now, when we're looking at the grand scheme of things, that's really the important parts about losing days. You go back, you review your trades. Now, you should be reviewing your trades every day anyway, but you specifically review the trades that you took and learn, what could I have done better? Did I do anything wrong? Or was it simply that the market chose to go the low probability route and I got stopped out? Wrong place, wrong time. If you look back at your trades, like we said earlier in the video, and you run into a situation where you look at it and say, you know what, like here on the Dow, I look at this and I say, would I want to short this if this were on any other day at any other period of time in this specific context? Yeah, I would take that short every single time, and I would not hesitate about it. That means that generally speaking, I followed my rules, I did what I was supposed to. It just so happens that the market chose the low probability route, and I was stopped out. Welcome to the markets, right? So again, just to recap, important things to learn from losing days. Specifically, review your trades. You should be doing that all the time, but learn from the mistakes. Did you make a mistake? And if you made a mistake, learn how to correct that issue. Did you fat finger a hotkey? Did you accidentally place a long when you meant to place a short? Learn those problems and fix them, right? But if there were no problems made, then go back to a further out zoom and say, you know what? Why was today so weird? Why wasn't I? Maybe I slept bad, right? Maybe I had a bad night's sleep, or maybe I'm having a fight with my significant other, or whatever it happens to be. But if that's the case, you just unlocked and learned something about you as a trader, right? You can now say that, okay, well, if I'm coming into the day and I had a losing day and I had a really hard time kind of sticking with the markets because I was at the hospital last night with my kids or whatever it was, then you know in the future, if that scenario happens again or something close to it, don't trade. You know that you're not in the mental state of mind to actually make that trading day successful, or at least a good chance of success. Another thing is, are there any holidays? Are there anything going on that could cause the markets to be a little bit different in the way that it acts, where it might choose to take those low probability scenarios more often than you might actually give it credit for? Something to keep in mind, today was a bank holiday. The markets were open, but it was a bank holiday. And because of that, there is a lot less volume. I believe Canada also has a holiday as well. So we're dealing with a lower than normal volume state of mind where the markets are generally going to run into some trouble. And that produces this situation where the market will choose to take lower probability scenarios. Something to keep in mind, something to think about. And if you don't have some of these things in place, some of these rule sets or some of these mindsets or just general check off the list type of things in your trading, you might want to consider adding them for these specific types of losing days so you can learn from them and grow from them and become a better trader for the next day. The important thing is that we capped our risk, we locked the risk in, we did not accept any more risk so that we can come back tomorrow to trade another day. That's going to do it for this one. Kept the losses small today, not anything to really write home about, but it is a very important talking topic on learning from these types of days and growing from them. hopefully you learned something from today. I hope you had a great trading day today. I had a little bit of trouble ending down on the, but you know, it's a learning opportunity, and I definitely want to expand on these learning opportunities when they show up. So I hope you had a phenomenal day. I hope you had a winning day, and I'm looking forward to coming back tomorrow with the markets hopefully a little bit more back to normal, so we can lock in a little bit of the positive numbers instead. Otherwise, though, enjoy, rest up. I hope you had a phenomenal trading day, and we'll see you in the next video. Thanks.